The content presented today is not directed to any investors or potential investors and does not constitute an offer to sell or a solicitation of an offer to buy any securities. And with that being said, it is my honor to introduce our panel of 4 new and emerging managers that are focused on Latin America, starting with Christian Guardia, Managing Partner at Adventures Capital, Marcus Schreier, Managing Partner at the Ganesha Lab, Javier Cueto, Managing Partner at Imagine Ventures, and Andres Baer, Managing Partner at Sevilla Ventures. Now, Andres, why don't we start and having you introduce yourself to our lovely audience.
Hello, everyone. Thanks, Niels, for the opportunity. Thank you to BC Lab. Pleasure to be here with all my LatAm colleagues and friends. Andres Baer here from Santiago. So I'm managing partner of Sevilla Ventures. We are a firm composed of climate investors, scientists, and climate entrepreneurs with a focus on supporting exceptional teams addressing climate change in Latin America.
Very interesting. Thank you, Andres. Marcus?
Yeah, thanks. Also, thank you to VC Lab. Thanks, Niels, for hosting us today, giving us the opportunity to share a little bit of our experience. Marcus Schreier, my name. I'm German national living in Latin America since 12 years. More from a corporate background originally, but then many years ago started to learn about this exciting world of entrepreneurship, innovation, and venture capital. We are focused on biotech. We are trying with our focus on biotech to really impact the world. That means we are looking at food scarcity, at climate. We are looking at elements in the health side. That means aging population, chronic disease, etc. So very much focused on impacting the lives of millions of people globally. This is our focus.
Awesome. Christian?
Sure. Well, hi, everybody. And, same as everybody else, thank you to the VC Lab for hosting this amazing panel. I'm very excited to share what we learned so far. Well, my name is Christian Guardia. I'm managing partner at Adventures, and similar to Marcus, I've been doing most of my career doing corporate innovation and then joint ventures with startups and basically doing business development and growth with a focus on SMBs, which gave us the insight for our thesis and our focus right now is it's basically driving productivity across the region. We are looking into anything and everything that's B2B that can solve any issues that are clogging productivity in Latin America.
Thank you so much for introducing yourself. Lastly, Javier.
Yeah, hi Niels, and hi to everyone. It's really cool to be here with all people I know, and also it shows a little the power and the potential of Chile as a hub of venture capital. We are all from here, so that's really exciting. Well, my background it's been a lot related to the startup ecosystem. I've been over 10 years working in incubators, accelerators, and now this VC firm. And at Imagine Ventures, we are really excited about the future of work. We are looking forward to meet entrepreneurs and startups that today are working on digital transformation, on sustainability, on people, and also the opportunity that the future of finance presents. So we're working and talking with entrepreneurs from all over Latin America. And yeah, my background also, besides working in the accelerator, it's a lot with corporate venturing. So we work a lot we've done over 35 processes of open innovation. So that's also has been a really cool insight for our thesis to understand what are today the corporates looking for and what are the needs today of the industry. And that inspire a lot about the thesis of future of work and things that we've been looking and talking and discussing. So that's briefly a summary.
Okay, thank you all so much for introducing yourself. I've gone ahead and put all of your LinkedIn details in the chat. People want to connect with you. it's there. And next up, let's dive into some like origin stories. Like Javier, what inspired you to become a manager?
Oh, that's an interesting question. So yeah, I think from the beginning, and since I was in the uni, I remember when I was studying engineering, the first courses of innovation and startups started, and I was kind of taking all those courses. And I remember we were like 5 people. That was something so new that like nobody talked or understood really well what this startup ecosystem was. Um, and after starting working more on it, understanding it, and then starting developing my professional career in working and supporting entrepreneurs, I think that was what inspired me the most, seeing the potential of change that entrepreneurs can make into the not only the economy, but also the society. And also seeing the potential of Latin America. And I think that's something that inspired a lot us, like as Imagine, to start going deeper into not just being an accelerator, which we were been doing like in the last 10 years, and going and having this new hat as an investor as well. And also doing it in a way that has to be more challenging, 100% private model, trying to look for the entire region. And for us, a little bit what inspired us the most was this also connections through Latin America. We've been working in really, really nascent ecosystems such as Bolivia, for example. I was there last week, and it's incredible to see how in 2 or 3 years, these new ecosystems arise completely and they have such a potential. And you see there is huge opportunities and things to change. And probably that's something that make us different from more developed markets such as the US or Europe, or here are tons of opportunities, and the impact that entrepreneurs and startups can have, it's huge. So I think that's the thing that inspired us the most, was how we can also create more value and have a more comprehensive offering, and that also, I will say, allow us to make that step and going into the VC world. So yeah, I will say that's something that really inspired us in this transition in roles.
Right. It was the next logical step for you. Marcus, how did you get started? Like,
how did I get started? I was, 25 years in corporate, in the life science technology industry, later on corporate officer, etc., C-level management career. But at a point, I got on not only an inspiration, I got a little bit bored in corporate, honestly speaking, but I also got an inspiration that I saw when I was in Brazil, the power of the nature. That means the diversity, natural diversity in Latin America, combined with incredible science resource. And I said, why is that not turning into something with economic impact? And started to evaluate that in more detail. And in 2017, I started with a program and with a structure of a company which combines deep education to really balance the lack of biotech business education for scientists and in general in Latin America, which people students in Boston already in college get. I mean, when they're starting in 5th, 6th grade, they start with that. So bringing this educational part, the entire access network, investors access, etc., and on the other hand, the scaling, that means access to the United States, to more mature ecosystems.
Right.
That was the structure which we established, but the big problem continued to be access to capital, because biotech, where we are, is very specific. It's very different than any other investment. So therefore, we decided, and it motivated me from the early on, but I just also needed to have the track record. I had a corporate venture, a corporate, let's say, officer track record, but no track record as an investor. So I needed to build that track record with this structure. And then the next logical step was then to launch the fund. And it was an exciting journey, I have to say, really amazing, motivating, passionate about it.
Okay, that's very interesting. So you saw a lot of the innovations happening in universities, and that wasn't translating to anything.
Exactly. Absolutely.
Okay, no, it's a noble goal to also, have biotech affect the world more meaningfully. Christian, can you tell us a bit more about how you get started? Okay.
Sure. So to me, it basically boils down to I was part of an amazing journey that helped a startup grow from Chile to, I don't know, probably like 12 countries now, right? For a specific vertical as a B2B SaaS. And I saw two things that really changed my view, or like how I approached innovation, which is I saw a machine operator realize how his life would change through the use of technology in his day-to-day work, and how something that he would somebody would not get any kind of real monetary improvement. This guy was not going to make any more money or anything like that, but he was so excited about this. He was like, oh my god, he spoke to the owner of the company, like, you have to get this software. I mean, you have no idea how many issues this is going to solve. And to see somebody like that so excited about something like this and realizing, I'm not going to have to do this and this anymore, this is amazing. To see that this is beyond just something that creates wealth, but it actually creates value on different levels, especially in an emotional one. I thought is, I think anybody can relate to that. And also on the same with the same startup, um, I saw something that started with these two founders um, doing this for their own business, and having seen this flourish into a company that I saw European customers saying, this is great, this is actually coming from Chile, and being able to say, hey, you know what, we have amazing talent in Latin America and we can export technology and innovation and generate value across the world. I think that's when I was like, you know what,
Okay.
I think there's tons of value to be created here, and I wanted to be part of that.
Right. It felt tangible, it felt real, and you wanted to be part of spreading that. That's very interesting. Lastly, Andres, what drew you to venture capital and being a fund manager?
Yeah, long story short, I was Niels 15 years ago in a coal mine in the Australian outback in Claremont. I spent 8 years in Australia working in heavy industries, mining, energy, infrastructure projects. And that's where I saw firsthand that sustainability was going to play a major role in transforming all of these industries. So I had to make that choice of had my Australian passport by then. Do I make a living in Australia? Do I stay there? Or I tackle this opportunity that I saw upcoming in LatAm that most of the managers here have seen, and that we've seen in emerging markets where we are heavily based in extractive industries, in agriculture. So there was an opportunity to create something big and impactful. So I did my MBA at Oxford University, focused a lot on VC and impact investing, came back to LatAm, worked with hundreds of startups in sustainability. And for the last 4 years, I was running a corporate venture capital fund from Engie, which is one of the largest energy players globally, based in France. And that's where I saw firsthand that there's overabundance, as the other managers have seen, of talent in the region, talent that it's world class and solutions that can be exported to developed economies. But where was the opportunity and the challenge? That a lot of this talent, especially at the seed stage, what we saw in the climate space, was lacking the right connections to experts, commercial channels, other climate VCs. And that's where we saw an opportunity. That's why I wanted to start my own VC firm after running a corporate VC one.
A lot of you have spent a significant amount of time in different regions. So what would you say sets the VC scene in Latin America apart from other global regions? Maybe, yeah, Andres, you can.
Good question. Several. If I had to take up two key points, well, statistically, LatAm is still one of the highest growing sectors in venture capital. That's one part of the opportunity. As a lot of you know, we're talking about 670 million people in population, a huge market. Where's the difference that in a market like in the States, you're fighting elbow to elbow for deals? Here is the opposite. So there's less competition, so we can enter at preferential valuations, and we have the same amount of emerging talent available. So say some of the key aspects.
Very interesting. Marcus, do you want to weigh in on this?
Yeah, probably just one additional one, which is, I think, is a positive one, is that we as emerging managers, and in general, I think as managers, need to build a different model where it's not just about the money, but it's about our involvement. It's about our capability, our connections globally, because at the end, this is an emerging industry. And in general, in emerging industries, rules are playing different than in a mature industry. So I think this beside the points which Andres mentioned, there's also an educational aspect for other investors. That means, on the one hand, you need to build those relationships with the founders to really be a partner for them, to guide them, to help them. But also you need to be a partner for your LPs, to really educate LPs about what it means to be an LP. So there's definitely a big difference in that, besides cultural, etc. But these are, for me, key points.
So to an extent, the scene is still somewhat nascent and people are trying to figure out what works, what doesn't. What would you say are some of the main barriers of entry to starting a fund in Latin America, and how would you overcome them?
From my perspective, it was a difficult one because I'm not nascent from Latin America. Right. Yeah. So for me, as I said, I first needed to build a track record, and I have to say, I also had to bring in partners, venture partner, or other type of relationships to really help me to build the relationships with potential investors. With the startups, with the entrepreneurship side, I built a solid relationship and track record already. But on the investor side, until today, I'm more successful raising capital in regions where I was a corporate, where I have a corporate track record, because these are the relationships which help at the end to bring in investors. But there's a lot of potential strong people in Latin America who can help you in the process, and venture partnering is a great vehicle to engage those people in the process.
Javier, do you have any thoughts on the barriers and strategies to overcome them?
Yeah, and of course, and I agree a lot with Marcus. I will say something probably that's not as good in Latin America, is that people here usually, when you start a relationship, you start from untrusting to trusting. So it's different from the US, when you become, or you start trusting people, except if they show you something or they do something bad, then you untrust. So that makes everything harder, and just simple things. It's like, I remember when we did the program, it's like, no, and then just send the pack and they will sign it. It doesn't work like that in Latin America. It's people, it's not, I mean, even though they understand that something they're not forced to invest, they just don't do it right away. They try to have 2 or 3 meetings. So usually I will say one of the barriers at the end is something more cultural. It's more conservative in this way, this is not, probably today is changing, but it's not one of the main areas of investments here in Latin America. They don't know much about it. A lot of corporates or people saw the startup ecosystem more as a marketing tool, as a PR tool. So they don't have it like completely or they don't see it as a serious investment strategy. So of course, for you, it makes it harder, and it's at the end, it's a really more relational kind of approach. It takes more time. It is longer. Your high-level individual approach. It's also more complicated because you really need to know the people, not just people that saw you one time or hear about you. You need to develop a more profound relationship. So I would say one of the main barriers here is at the end, it's a more traditional business ecosystem. So it makes it harder and slower the process in general of bringing new people here into, or new industries or new investors in general into this fund. So I would say that's one of the main difference in the barrier part.
Okay, no, that touches on something very important, which is building LP trust. How do you go about building that trust with LPs?
Yeah, well, in our case, yeah, and I agree a lot with I think Andres and Marcus said, it's this sense of community, and also like at the end you need to teach your LPs about this. So and that's something really interesting, and also like bringing people with different profiles. In our case, we do have LPs that are from the ecosystem, they understand well how it works, and at the same time, we have people that have never invested before in a startup. So when you have those both extremes, it's really interesting at the end how they also start to teach each other, they share experiences, and at the end, I will say here it's not just about communication. That probably more developed markets, yeah, the LPs are looking for to have all the info, being updated constantly, but probably it's not such a relational kind of approach. Here is the opposite. Like you constantly need to be in touch with them, doing events, doing networking, connecting them with, so they start to like get to understand better how it works, and that builds the trust. So that's how basically I see it, and that's something that as a firm you need to spend probably more time than the average in the relational part with your LPs.
Yeah, you build a track record, you build a community, you maintain that community. All of those are very good things to do. Christian, do you have any thoughts on the same topic? How do you go about building trust with LPs?
Sure. Well, I'd like to give you my 2 cents with an experience that we had with my one of the other GPs of our fund, where we actually signed an LP after having lunch with them during 1 hour. In Latin America, you can spend 2 months sitting with them, and there's like tons of questions that range from what happens if the founder runs away with the money. It's just So I think I completely agree with what everybody has said already. You are engaging with people that are very familiar with the ecosystem, and then you're also engaging with people that have. This is the first time they've actually sat down, and like the only interaction they had with startups is basically ordering through Uber Eats and what they get on the papers. So you have to take the time and patience to educate them, to go out and reach out and excite them, with news and like, look, this is what's happening. This is how our portfolio is behaving. I think that reaching out and not just be I think Marcus mentioned this, not just be a money middleman between the LPs and the startups, but creating value yourself both to startups and your LPs, right? So for example, we've had a few LPs that are saying like, look, I'd like to do some angel investment, help them out, develop their own thesis, like, look, tell them about your own journey, like the experience that you had, the what you've learned. And I think LPs are really right now looking for that. I mean, I was recently talking to a family office who mentioned something like that. Look, at the end of the day, basically all funds are the same at its core. So you have to develop something that really sets you apart, right? And I think LPs right now are looking for that. Like they're not only doing this for money. There's like a higher calling of trying to build a region, trying to create, help startups that are and founders that are trying to change the world. And I think you have to also become part of that.
No, I understand. Very insightful. Andres, do you want to weigh in on this as well? How do you go about trust with LPs?
Couple of additional points. As my colleagues mentioned, there's the education piece, which can be used as an opportunity, to be honest. So you'll need to be ready to engage a lot of LPs that are new to VC and like more developed ecosystems. and that can be an opportunity. So a lot of LPs will come in because great part of the value add you are giving to them is to take them on the VC journey with sessions on workshops on how VCs operate, on how are you making decisions. So you can use that to your advantage. That's an opportunity. And secondly, the great big question of how do you hack the relationship building? Because I've spoken with LPs that have told me I do business with people I've met for at least 20 years, for example. And I'm like, well, we don't have 20 years to build this relationship, do we? So you can, to increase this velocity and build relationships a bit quicker, one thing that has worked well for us is that you bring in this sense of community. So the more LPs you bring, the more referrals, and those referrals will be, if you bring them all into the same room, if those referrals speak to each other, you can accelerate the trust and relationship building process. And instead of 20 years, maybe, 20 days.
Yeah. That's ideal, obviously. So we talk a lot about LP relationships and all of that, but I want to briefly touch on something else, which is relationships with portfolio companies. Someone mentioned that, okay, there's lower competition in general, which is one of the benefits of the region. But what do you do in the case of like a highly competitive deal? How do you, as a new manager, convince like a high profile portfolio company to give you an allocation?
From my perspective, it's we, in our specific case, we have this other vehicle, which is the company which really engages with startups, which has already relationships with international industry partners, etc. So there we clearly have an additional value proposition, even though these organizations are two independent entities, but they work like a flywheel. So that means while the fund benefits from the experience of, let's call it for now, the accelerator, on the other hand, of course, the accelerator profits from the experience of the fund and the fund managers. So at the end, the startups have, through this investment, access to a slate of different elements, which is, as I said, the network, which is partnerships, which we have. We have partnerships with top-notch universities in the United States. UC Davis, for example, is a top-notch partner of ours. And that is something which is uniqueness. So we have tried to build this uniqueness for the startups so that we not only have a strong position today, but also in the future. So that as the market is growing and getting more competitive, that we still keep a unique position in the market so that we get the best deals. So that is definitely one of the elements which we have built.
Javier,
oh, sorry. No, I was just going to say, because it's kind of similar in our case with Marcus, since we do have also an accelerator, it's kind of, I would say that's part, I will say, of the offering in a way, because as Marcus also mentioned, we are completely separate. So the fund is not forced to invest in the startup from the accelerator, or that the startups or from the accelerator are going to go right away to the VC. But I think what the startups are looking are for how at the end you can add value to them with your knowledge, or your entrepreneurial approach, with your network. So at the end, I think it's how you're creating this value add based on what you built in your track record as an individual investor or as an entity. And I'd say in our case, since we've been almost 10 years in the ecosystem, that's something that entrepreneurs like a lot, that they see that something built from over 10 years, that we do have networks in different parts, not just Latin America, in the different continents. But also it's for you as an investor to also work with startups that are looking for that, because what also happens a lot, and I think right now it's changing because of the macroeconomic scenario that we are facing right now. But before you saw startups that just wanted your money, and that's all. They were interested of being coachable, of getting more kind of a more intense kind of, it's not an acceleration program, but still you need to meet with them, discuss with them strategy, like really open to collaborate, and they were just looking for money. So I think it's kind of a dance. It's a both way partnership. Right. And also for I will say now for the VC, it's a good time also to choose well. It's not the craziness of 2021 that if you didn't decide in a week, you lost the deal. And I think also now the VCs are doing what they were supposed to do, due diligence, right. Taking time for analyzing the deals. And I think so today, I think it's more balanced in a way, what also you are looking for and getting the best deal, but also what your conditions are for the entrepreneurs that you want to work with.
Right, it's more balanced. It's less spray and pray as during the heights of people are typically a bit more careful now, and that's generally a good thing as well. So you've mentioned accelerator programs, and all of you went through the VC Lab Accelerator program. What are some of the key takeaways you got from going through our program, Javier?
So I would say, like, now taking the VC Hub part of the program, like as we also face an acceleration part, I always highlight that for us, the most impactful part was the momentum. Like having to every week to deliver, it just puts you in a pressure mode, but also in a working mode that you need to show progress every single week, and every single week question yourself, getting feedback. So I'll say that the living that, and also because as we run an accelerator as well, it gives you another perspective because now you're not the one like in charge, you're the kind of the victim of the process right now. So you are kind of seeing it from the other side. I really get that, and I will say that really the work acceleration in the case of the VC Lab program, it's 100% accurate. Like you need to do it. You need to do it fast. You need to show results, and I think that's really, really helpful, especially in this scenario where you need to get more guidance. But it's not just theory. Yes, you don't just need to learn about the VC part. You need to do. And I think that's something like really, I will say, differentiate the program. And it makes a lot of, it helps you a lot. Like for us, we had a really good first closing. And that was just for the momentum that we got, because it made us do the things better and faster. And I think that's something that for me was kind of the highlight of the program.
Okay, it's the whole actions speak louder than words, I guess. Marcus, I see you reacting. Do you have anything?
No, first of all, I would echo what Javier is saying. You know, for me personally and my partners, it was really a big learning opportunity, but also really this element of dedicating and focusing your time to really turn theory into action and get to conclusions was really very, very helpful. I've meanwhile 2 or 3 of well-known colleagues in the world who have been going into VC Lab, and that means I've really recommended it. And I think it's a game changer, even if you have some experience in the venture capital market, because at the end it really focus you down to the most critical elements of building a lasting firm, not just a fund to solve, a financial problem for the next 3 years or something, but really building a lasting firm and thinking through every single element of it. And I think that is something you don't get concentrated and in that form. So therefore, for me, it was really the vehicle to enable me and my partners to get started. I would have probably taken 3 times the time or even more. I would have not made it. So for me, it was really a game changer.
Yeah, and in that sense, accelerator.
Yeah, exactly.
Yeah.
Well, I have to agree with Marcus and Javier, but I think for us, what really got imprinted in our brain is the power of the thesis. Basically, the thesis really is the heart of a fund, and everything cascades down from there. And one of the things that I really loved about the VC Lab is it's once you start doing fundraising, and once you start doing your closing, and once you start getting to approaching your second close, is that you start looking back at things that you saw when you first started the VC Lab, and you realize, okay, now I understand the importance of this. I think it's, to me, the VC Lab, it's kind of it's a gift that keeps on giving. I think when you look at other funds, and then you look at what you've done, and you see there's coherence, or at least there's some sort of coherence throughout the entire fund, through the size of your fund, the region, the size of your ticket, the people that you brought along, what value you create towards your investments, and then to your LPs. And you see there's a cohesiveness, there's a conducting line through it all. That's, I think that's the VC Lab signature. One of the things that I think we've really, you really can see the VC Lab hand on every fund. It's sitting here, and all the alumni that comes out of the VC Lab, is that, there's nothing just randomly there. The reason every partner has been selected, the reason every decision has been made is because they give you a framework. And again, to me, the fact that the core of this framework is you have to have a thesis that really resonates with something that's not just, look, I have access to money which I can deploy, but really, look, I have some insight on this industry and this region, and I think, and I have an edge that allows me to outperform other funds at selecting and helping out in startups. To me, I think that's the best that we got out of the VC Lab. And aside that, we got our asses kicked every week.
Andres, did you get your ass kicked every week? Or?
I got my ass kicked every week.
Okay.
Now that I'm a partner also at the DESAL program, I'm still getting my ass kicked. No, I can add to what my colleague said, that in addition to all of that, another value add is the community aspect. So I have chats now and watch videos of fund managers that are from cohorts after the one I was in, right. Or even, I don't know, as an example, well, I speak with the people here in this panel on a regular basis, but last week I was speaking with Ihar from Geek Ventures. He's one of the top performers of the program. He kindly offered some one-on-one time to provide advice. And I've had those sorts of conversations with other members of the cohort. So that community aspect and help among fund managers has been very powerful.
Okay, so it provides value even after you
definitely
go through the program. And this dovetails into one of the audience questions. Mauricio is asking, how long does the program take? It's a 16-week program. We have 2 weekly sessions every week. One is an AMA that allows you to ask questions and learn about developments about the program, and a webinar which will typically feature people like the ones you see on stage right now, people who went through the program, who can help the future generations get started. And apart from that, there's the weekly sprints, which are assignments that sometimes lead to asses getting kicked. So we want to take more audience questions, so please remember, if you have some, add them in the Q&A and upvote them. So I'm gonna look at the Q&A to see if there's another question we could ask. So regarding the charging regional landscape, Lucas asks, how do you work with LPs that do not have a long-term mindset?
Oof. I need to quickly jump in there, but I think here's where you take the approach. You just don't work with them, because if you're gonna have anybody that's not gonna be aligned in terms of expectations, it's gonna lead to an unhealthy LP and fund relationship. And I think again, just tell them, like, look, we're not aligned, and that's the end of the conversation. It's a long-term game, and if they don't see that, then there's no reason why you should bring them along.
No, I guess it's better to rip the Band-Aid off before it causes trouble later on. Marcus?
No, I can echo that because it is a long-term game. One of the things you always need to think about, that this is not just bringing in money now and then getting a return tomorrow. This can take up to 10 years, no? And sometimes even longer. But so I completely agree. I would not spend too much time on that, because clearly then your thesis is not aligned, and the sense of venture capital as such is also not aligned. So therefore, my echoing Christian, just don't waste time on it. Don't spend too much time on it. Will not result in anything.
Okay, that's interesting. Does anyone else have any thoughts on this?
You can try to get an understanding, at least, because I've seen that question as well, as to why only short term. Is it because they haven't been exposed to longer term investment with a different impact and different value add, as you'll see in VC? Because if that's the case, maybe you can do some work on explaining the why. The process, the life of the fund is usually 10 years, etc., and provide that information. Now, having said that, if regardless of that, the LP still wants short-term gains, it's happened to me as well, or they're set on having, for instance, a minimum guaranteed return. Yeah, of course, there's some misalignments that you cannot just work out. So I would take the approach Chris said, and then it's just not a fit.
Okay, Marcus, I see you're eager to end on this.
No, I just wanted to bring an aspect which I learned in VC Lab, which I practiced, which is working very well, and which is aligned with the question. It's about understanding what is the archetype investor which aligns with what your fund wants to accomplish. Yeah, that has to do. There's time is just one very small part of it, but the largest part is really what is your fund wanting to accomplish? Because of course it's about returns, but it's also about impacting, in most of our cases, impacting the ecosystem, building the ecosystem, etc. And therefore, for example, it's so important to really understand: is your archetype investor? Does it make sense to educate someone who has always been investing in SaaS, and now you want him to invest in biotech? You need to see, is there any alignment or not? And then you can also avoid those moments. So this mapping of the archetype investor, I have to say, was for me eye-opening, even though it sounds super logical, but it was eye-opening and has helped me a lot.
Yes.
And so, just a quick one there. It's been written about it before, since Hustle Fund raised their first fund in 2018. They were saying our most common mistake, we would go to the wrong archetype of investor. Then myself, I would go to the wrong archetype of investor for telling you not to.
Yes,
so it's just such a common mistake, and you see it happen, and I guess you have to leave it to get to
and
learn.
I think it's a learning process. Like the archetypes, it doesn't appear like day one. Like it's part of your discovery process with LPs, figuring out which is the archetype that works better. It's the same, like many times, or Adeo or Mike said, like for your first fund, don't waste much time in institutional investors, because they probably won't invest in a first-time manager. And you try to spend many times on them, they give you meetings and everything, and after 3 months, they will say no anyway. So those are things that you start to learn, and things that at the end, it's part of your, I will say, learning curve. But yeah, I think that one of the main issues of arrears that we discussed before in Latin America is that, as usual, investors are more used to traditional kind of investment. When you tell them 10 years, it's like, wow, oh my God. So it's like, so that's also why you have to tell them, and I agree with Andres, at least teach them or make them like understand how it works, and say, yeah, we are not asking you to put 50% of your money in VC. Like you need to put 10%. If that 10% works, well, you still have 90% to put it in short-term investment, and then you can try to change a little bit their mind, but if it doesn't, just move on.
No, that makes a lot of sense. And you all mentioned, mistakes and learning process. This ties in nicely to a question Molly is asking. Like, what would you do differently in fundraising if you could go back in time?
Oof. To me, it would be the power of networking. I mean, when you first, I mean, you really have to come. You can't be shy about this. You know, when we first started, I think we were super shy and like, you know, I would say, oh, you know, we're starting a fund, but it's a small fund. Like, you know, nobody cares if it's big or small. Just say, you know, come out storming through the gates, you know, and come out screaming, you know, what you're trying to do. Like, don't be shy about it. You know, if you don't show confidence in what you're doing, then you know you're setting up yourself for failure. And the other thing is like just you know go meet everybody, and then you know it's okay to make mistakes, just learn from them, but try and meet anybody who you think could be of value, you know. And I think one of the things that VC Lab really tells you is like you have, you know, networks are created by generating value to somebody else. You know, you can't just be, you know, the person who goes into a meeting and be like, hey, can you introduce me to this, and ask for referrals left and right. You know, you have to give something back. And I think you have to, before you start doing that, just, you know, sit down and write down, you know, what are the things you can bring to the table on a conversation? What value can you generate? And then, you know, be generous about it. And once you do that, I think, you know, it sets you up to very, very interesting conversations later on.
Okay, interesting. Any other time traveling advice?
Yeah, I think I would talk probably, or it could make sense for the ones that have a venture studio or accelerator or are building the fund from something bigger, or I don't know if the word is corporate, but not just from individual managers, is that the focus is an issue. And I think that's part of the learning process. Yeah, when you're in those 16 weeks, it's like you're really, really focused on the fundraising and closing and everything. But after the 16 weeks, one of the things that probably after doing this process, I think it's hard to keep that focus when you're also have the accelerator in one side, or when you have to like doing other projects at the same time. So at the end, fundraising it's a full-time job, and that's I will say. And when you have many partners, and those partners are also part of different businesses, it's complicated to have that focus. So I will say that from the ones that are running this from a venture studio perspective or accelerators perspective, I will say you need to sacrifice things. You need to define which is your priorities, and there will be things that you won't be able to do, and things that, or you will have to postpone. And I think something that I learned in the process after doing a really good first closing, and then things getting, well, also the economy didn't work or didn't help, but things getting slower, is that of course then you start doing, or you have in your plate so more things, and then you need to balance, and sometimes fundraising doesn't get as much priority as it should. So my main learning, and also my main suggestion, is just sacrifice things, prioritize things, and yeah, fundraising it is a full-time job, and it's not just the first closing. The first closing is, you say, when you like, yeah, you do it and you feel, yes, I did it, but then you still have so much still to raise, that you need to understand that it's hard to keep that momentum, but you need to understand that it's just it's your first milestone, but still you need 2 or 3 more closing until you get to that goal.
Very interesting.
But there's probably one point which I think Javier just pointed towards. This first closing, on the other hand, is also super important. And if you ask me what would I do better, what would we do better next time, is we had reached 20% at a point, and then we found reasons why we want to continue and don't close yet. And we continued and we continued, and then we started to close. And the first ones which committed didn't hardly remember. So that means my recommendation to everybody is, you know, when you have your 20% or your 15, 20% committed, go for it. Because once you closed, the world is changing, because suddenly you do your first investments, you have different stories to tell, you know, everything changes from my perspective after the first closing. And I think therefore, you know, if I would go back, I would go straight to the closing from the moment I have the 20% commitment reached. That was clearly something where we didn't listen to Mike and Adeo, and we found good reasons, and they agreed to the reasons at that point. But today we have to say it was I would do it different.
Okay, so yeah, a lot of common themes: be bold, be confident, get out there. Andres,
my 2 cents looking back, and this phrase is not mine, it's from Eric Van from Hustle Fund. He says 20% is pitch, the other 80% is process. And to be really rigorous about process, which I wasn't, we weren't at the beginning. You are told by VC Lab, get your templates right, get your stages right, because at the beginning, yes, you have 30 prospects, 50, so you can just use your Gmail account, it's fine. So I was leaving the templates on the side. Suddenly you're dealing with 700, 800 prospects, and you need a process that runs like a clock, and you need all your templates. Have templates in different languages, you need all your different stages and follow-ups, and getting that right is so valuable, and it's so much easier if you get it right from the beginning than if you start cleaning up your DSL as we had to when you have already an overload of LP prospects.
I want to be mindful of everyone's time. We have 5 minutes left, but if you are available to keep going for a bit longer, I would also be happy to. Also, let us know in the chat if you would like to have this conversation be extended for a little bit. That being said, next audience question is from Klaus. He's saying, having grown up in LatAm myself, Mexico and Argentina, how do you navigate and de-risk investments given the common political and economic instabilities in the region?
Ooh, sorry, I have to jump on this one.
Yeah, go for it.
Actually, I was listening to this podcast. It's called 20 VC, which I think is great, and they interviewed one of the managers from Kazakh, but the question they asked was when he was running the people that were running Mercado Libre, and he said, like, one of the things about Latin America is that everybody looks at Latin America as like, oh, all this instability and but the thing is, like, when they say the word crisis, and this guy said it perfectly. He said in Argentina, crisis is just called Tuesday. It's these companies and not the companies, really, the founders and the teams, they have grown in this environment, so they know how to adapt, they know how to change. They already incorporated, word lessons and scars that show it on what happens when you run a business and when you have a startup in Latin America. That everything, there's a certain level of uncertainty that you get used to, and you know how to navigate it. And I think that the only thing that sets us apart from other regions, particularly more developed one, is that this is set in our DNA. Again, devaluation of your of your local currency. Like that happens once a year. Or every 2 years. You just learn how to deal with it. It's part of the game, and you just move on. I don't think everybody who looks at it is because they haven't seen it day to day and the impact it can have on a business.
Yeah, I agree with Christian, and also I think it will depend on your scope of LPs. Like if your LPs from Latin America, it's a given. So if they are thinking about investing in your fund or any kind of investment, they are part of that kind of political or economical situation. But I will say that I think also that's I would say like a biased vision because of like if you look today to the US, like the political instabilities, you have a former president like in the process of a prosecution and at the same time applying to be president. And in Europe, you also see how today it's a war. So I will say like anywhere today you see political instability and economical instability. I will say that probably it's a more kind of it's been more common in LATAM. So that's probably, we have the label of that. But at the end, the market works like that. The markets are still growing, and I will say that at the end, like also you see Peru, for example. Peru has, if I'm not wrong, 7 presidents in the last 6 years. and the Peruvian economy is still growing. So and you still can do business there. So I'm not saying that's not an issue, but at the end, it's like America Latina has know how to handle it, and I think it's something that's happening all over the world. And at the end, you need to get used to it, and there's way you can prevent from that. Or like, for example, that's one of the reasons why mostly all the VC funds from Latin America are incorporated in Delaware in the US. So you also give more confidence to your LPs that, okay, I'm investing in LatAm, but the fund is in the US, we are based in the US rules, and that of course gives them more also security about the investment they're making.
And I think there is beside this, the point of establishing in the US and the culture of resilience, overcoming problems, removing problems, etc. There is another one which I think we should never forget, that we have a significant opportunity in Latin America, not only because it's a growing market, it's a large market, etc. For good and for bad. We have, for example, a startup that have 85 employees in Chile and they have 1 employee in the US. They are completely US corporation. They are completely seen as US corporation, but their cost level, the money they need to really get forward, move forwards towards, towards success, to growth, etc., is significantly less. And that's an arbitrage opportunity, which Latin American funds can definitely leverage. So it's something we need to keep in mind.
No, this has been super insightful. I just want to end on like one final question. What are some sectors that you can see would benefit the most from VC showing increased interest in Latin America today?
Climate tech.
Of course.
I have to. Yeah. Climate tech, of course. 2% of global climate tech investments are deployed globally. Of what's deployed globally is deployed in LatAm. It's a huge opportunity. Demand is gonna spike, and climate tech will be the new fintech in the region.
Interesting.
Of course.
Yeah,
I would add, in general, deep tech. Why do I say that? First of all, we were part of a report which was developed by the IDB, and the IDB sees that as well. Tomorrow we have an event about that here in Chile. And why is it? Because deep tech is a game-changing element across the world. And Latin America has been at the forefront of digitalization. When you see that, it's really impressive. And I think the next waves are in those areas of climate, of deep tech, etc. Biotech is part of that. So the talent is there. The resources, not only from a talent, but from a natural resources and a needs perspective, the customer needs perspective is there. So therefore, I think those are really big areas to make a difference.
Yeah, I guess.
Yeah, and I want just to
also there that helps. Sorry.
Yeah, and in general, we'll say Latin America, one of the huge opportunities that it has is the inequalities, but inequalities in all the way, just not social inequality or income inequality. Like when you see productivity, for example, we are 50% less productive than more developed countries. And that is the opportunity. And that's why the future of work is something that's really interesting, because at the end, it's just not giving technology. It's technology to do things better, how you make your business more sustainable, how you make your business like more productive, how you at the end also take care of people. Like I would say, like COVID helped a lot also to put the well-being of the people and the workers as a priority. And I would say that, and it's the same when you see financial inclusion. It's a huge opportunity here, but at the same time, and that's something interesting, there is a lot of startups trying to do that. So, and you need to provide a unique value proposition, something different. It's just you're tackling the issue, but not in an innovative way. I will say that's also a problem. So there is a huge, from deep tech, I agree with everything. And I say, just think that is huge inequalities in the region. So how you help to close that gap, there is a huge opportunity, LatAm.
Yes. And just to add into to what you guys are saying, I think one of the things when people mention instability, that instability for the most part, translate into poor deployment of public policies in every country. And I think that's where startups are really coming into play and solving issues that, for the most part, governments are not solving. So you see, for example, why Uber is so popular in Latin America. It's solving a transportation issue that was not being tackled, and it's also giving a major boost to employment. You see edtechs really having an excellent performance in Latin America. Why is that? Because usually public education is not performing up to what people are expecting, and they're seeing this solution as something that can really help out. So when it comes to what can VC deployment resources, I think anything that I think Latin America is a region it's eager and thirsty of any solution that can come in and solve whatever problem they're facing. And I think the adoption of every major solution in Latin America, I think proves that there's like no early adopters. They just everybody wants to jump in because nobody's really taking care of its population.
That's very insightful, and I just want to thank you all for speaking today. This was a great conversation. We will share the recording with all of you afterwards, and just Marcus, Christian, Javier, Andres, thank you so much. Hope to see you at one of these in the future. We'll do more of them. And to the audience, thank you for watching. Bye, everyone.
Thank you, guys.
Bye-bye.
Take care,
Thank
everyone.
you. Bye. It was a pleasure.
Pleasure. Bye.